Coming from NetPicks headquarters, it's the Day Trading Authority with Mark Soberman and Brian Short.
Welcome to the NetPicks Day Trading Authority. This is Mark Soberman, and we're back with you here in 2013. I think this might actually be our first podcast of the year. Kind of hard to believe, so much time goes by so quickly. But I'm glad we've been able to get around to this. I'm joined today by my co-host on the Day Trading Authority, and none other than Brian Short. Mr. Short, are you with me today?
Mark, I'm with you. It's great to be back again for the first rendition of our podcast for 2013.
All right, very exciting. And if you're watching this or listening to this and it's already 2014, I'm telling you the material that you'll hear is timeless today. That's the promise that you have from me. At least the things that I share with you. I can't really speak for Brian, but what you learn from me will definitely be timeless.
I don't know if I have a comeback for that, Mark. Some of the things you say are definitely timeless.
Got it. I was a softball. I was just kind of like laying that one up for you, just so you can knock it out of the park.
Yeah.
You know, I expect you to kind of come prepared with some cut downs, some comebacks. You know, that's the key here. We're not really here to actually teach people about trading. We're just really here to insult each other, aren't we?
Well, that's the vibe you give. The vibe I give is a little more positive. So it's kind of like yin and yang, right?
Yeah, you are a little bit more optimistic and enthusiastic about everything than I am. I guess that's probably true.
All right.
Very fitting. So let's go ahead and kick this off and get started. I did want to give out a couple links here up front, some information that I think would be useful for those of you listening. And the first one is PremierTraderUniversity.com/webinars, and it's Premier without the E on the end. It's taken me quite some time to even remember that myself. But the reason I'm giving you that link is because it's a series of free webinars that we put together, usually one, maybe two a week. We also have replays available, and we cover a lot of really great topics that we can go into a lot more detail than we can do in this podcast here today. And just to give you an idea of some of the things you can watch immediately, we had a webinar on how to create a full-time income day trading futures, how to trade Forex in 15 minutes per day, how to scale your trading business, spending less time to actually make more profits, trading with a small account, because a lot of people don't start with very large accounts, trading energy futures. So we have some really great ones in the archive, and then we got some really neat ones coming up, from best trading opportunities during European hours, how to make 100% plus returns in options trading, and a few others that'll be coming up here in the near term. So I always recommend that. Go to PremierTraderUniversity.com/webinars. And one more that I want to give you, which is well worth it, again, just trying to really talk about education, is NetPicks, NETPICKS.com/hangout. And every Friday afternoon, 2 o'clock New York time, Brian, myself, Ron, who you'll be hearing from a little bit later, Troy Noonan, and other people on our team, and sometimes even students and customers of ours will come on, and we'll just do a live video-based, I call it a show, really, and we talk about trading. We do a lot of Q&A. We show you examples. We show you what worked during the week. We talk about next week. It's free. You can come. You can interact. You can ask questions. You can watch it on replay. So definitely check that out as well. And that's netpicks.com/hangout. So a lot of other great places to get free information from us. Take advantage of it. We put it out there. No obligation, no charge to all of you in the audience. So Brian, I mean, how has, speaking of 2013, what's been going on with you in your trading so far this year?
Well, so far this year, 2013 has been pretty good. January was very active, like we typically see it. The last 2 weeks, I'm going to say, in the market has been a little bit slower. Markets for the last, couple weeks, like I said, just haven't been breaking out like we saw them in January. So the one thing we know, in whatever current market condition you're in, whether it's in a trend or a sideways market, kind of like we're in right now, it will change. Markets never stay the same. So you just need to expect that the trading conditions will come back and be a little more favorable. So that's what we're looking at right now.
What do you do though in that situation? Like, how can you really be confident it could wear on you?
It definitely wears on you, and it can be a grind. In fact, I'm going to share a story here in a little bit about a trade, but you just have to, TJ, I'm going to refer to TJ here. He likes to talk about leaning on your method, your approach, and just be consistent in your trading and continue, to take those trades, each and every one, as your trade plan / system dictates. And that's what you can do. We as traders really don't know jack, right, when it comes to trying to predict the market and when it might start to trend again and when it might, stop trending. We just have to sit back, rely on our system, take each and every trade exactly the way our trade plan dictates.
Who's this TJ? What is that all about?
Troy Noonan, our fearless developer of Trend Jumper. So
I know. I see. No, I just wanted to. When you said TJ, I figured you were like sort of talking about your next door neighbor there. So I wanted to make sure that people knew who you were referring to. TJ is one of our coaches. Yeah. Yep, Troy Noonan. A lot of people know him in our community, and really great guy, and has a lot to share about trading. Well, let me ask you another question then. So you're talking about leaning on your system, and it sounds really good in theory, but wouldn't it just be better just if a market is crap in a given week to trade a different market, next week?
Good point, Mark. And I work the support here at NetPicks, and I get this question / example posed to me quite often. And what you just described is the last thing that you want to do. And what you're doing there is really chasing performance. And I guarantee it, if you take that mode, if you jump from the latest top market to the next top market, you are going to manage to basically catch all the losers, because when a winning streak happens, what's the next logical thing to happen after that? A losing streak, right? Or a series of losers. And if you're jumping from hot market to hot market, most likely you're going to pick up all the losers in that process.
Yeah, it's interesting in the Hangout that we do every week. I try most weeks to show the report card for the week with our PTU systems, the winners, the losers, nothing's held back. Not everything works, so we try to be super transparent with that. And I point out a lot because what'll always happen is I'll show one of the markets that didn't do very well, and somebody will come into the comments and go, oh my God, what happened with crude oil? Like it was like a tragedy that it had a losing week. And I'll always say, wait till next week, ask me the question again, and it's amazing. It's not 100%, but how often that cruddy market this week turns out to be one of the stars next week. And then the market that was, hotter than can be and was, couldn't lose this week turns out to be the one next week that's break even or even loses money. And I think it's kind of like you're saying, the chase of the performance makes it even worse. I mean, when you start to chase what was hot this week, you end up losing even more than if you just literally would have stayed with what you were doing, and you typically have no chance, of actually profiting. But it's very frustrating. I know for us, and we're going to talk to Ron here in a little bit, and Ron is really on the front lines of our support, and he has tremendous patience, but we have to kind of deal with a lot of people's psychology. We're probably more psychologists, right, than anything else. I don't know if we spend more time supporting people on technical software questions, or we spend more time just dealing with people's psychological weaknesses when it comes to trading. I'm not sure what you think, Brian, but.
Well, for sure. I mean, the trade psychology is really the #1 issue when it comes to successful trading. If you think about it, we let our mind mess with our trade process instead of leaning on the system like I talked about earlier. And, it's tough as a trader to take a series of losses, 2, 3, 4 losses in a row. And continue, putting yourself out there into the market and continue trading. That's hard. But, you really have to stick to your trade plan is the bottom line. One of the other things we talk about quite a bit inside our university and when we talk to customers is you've got to really have confidence in the system that you're using, whatever it is. One way to get that confidence is to, do some back testing.
Sounds like a lot of work to me.
Yeah, it sounds like a lot of work, but it's. And I'm going to use another Troyism. It's the ditch digging. Laying that foundation of trading, and you got to do work. And I think too many traders out there today are looking for that piece of code that they can run, and it basically churns out the profit.
Are you telling me this isn't get rich quick?
It is not get rich quick.
Wow.
It's
crushing my dream, Brian.
It's get rich slow.
Oh.
Slow and consistently. So
okay. As long as it's get rich, I guess I can try to be patient a little bit. Well, if we had some day traders out there listening here, or people who think they're going to be day traders, and they're going to ask us, Brian, what should I start trading first? I mean, what's your answer going to be to them? What market or markets are best to start with?
Well, that's really going to depend on your situation. Everyone's different. Each of us have a different amount of starting capital. That would play into the equation. Then time is the other issue that's a determining factor. How much time can you spend in front of your screen, so to speak, your trading desk each and every day? So you have to answer those two questions first. You do that, then I could potentially make a recommendation. Now, some of the good markets that I like to trade personally, one of my favorites right now, and Mark gets tired of me bantering on about this, but wheat is my favorite market right now for a number of reasons. I think it's a great market for brand new traders, okay? It's a great market for traders that don't have a lot of capital. It's a great way to kind of dip your toe in the trading market, so to speak, and get some exposure. The other thing I like about wheat is when you trade it, it starts at 10:30 Eastern Standard Time. Okay, a lot of days you can be done in a very short period of time. I mean, my best day I'm done in 5 to 10 minutes. Now, with that said, there are times you've got to trade longer into the session and work a little harder. But for those reasons, I really like wheat and I'm talking about wheat futures as an opportunity for traders to get involved.
Do you think you can scale that market? I mean, it's one thing to trade one contract. Could you trade 5 or 10 contracts on wheat?
Oh, you sure could. Yes, definitely. It's a very liquid market. When you think about it, we're trading against a lot of individuals for different reasons. Farmers are involved in that market. They're trying to hedge their position, so there's a lot of activity there. There's a lot of traders that trade the market too, and as supply, demand and supply ebb and flow, and you go into the different seasons, that market becomes very active and very, very liquid.
Good deal. What other any other suggestions, maybe from a trader that has some experience, but just when we do our surveys and we ask people coming to the university for the first time, about 8 to 12% are profitable, which means 92%, 88 to 92% are not profitable, but a lot of them have put a lot of time and money into this effort. What other options do you think are available to somebody?
Well, there's always swing trading on the Forex, which I think is a great option. If you're time challenged and can't sit in front of your screen for long periods of time and you want to consider swing trading, I think the Forex is a great place to consider. And the key there is to find an approach, a method that guides you in and out of trades, tells you when to take profit, when to, the maximum amount of risk you should put on a trade. You got to have some kind of guidance. You can't just randomly go at that. But again, swing trading the Forex, I think, is a great option there.
I guess that's probably a perfect segue, since we're talking about maybe some problems or issues of trading, to go into, I think, your favorite part of the podcast, Brian, which is Tales from the Stupid.
All right, and I'm going to fight you for first up in this session, Mark. I want to go
well,
first.
Well, hold on. I know you want to go first, and you know what? This time I'm going to be, gracious, and I'm going to let you go first. But I want to kind of clarify something. Even though we call this segment "Tales from the Stupid," and I know you have a lot because it's plural, think of it like we just want a tale from the stupid. So try to pick your best one.
All right, I'm going to pick my best one.
Okay.
And so here we go.
Tales from the Stupid.
This is going to take a little bit. I'm going to set it up, and really, it's a tale from the stupid, but it had a good outcome, but it certainly could have had a disastrous outcome. So I want to share it. This is from my own personal live trading. One of the things we like to let you know here at NetPicks, we are traders first, and we trade live in the markets each and every day. So this goes back a little bit. One of the events that I will trade personally is the FOMC statement, and it used to really move the markets big time. And but recently, over the last few years, it hasn't been as big a deal. But this goes back to October, and I decided this day I was going to take some trades on crude after the release. And so my first trade out of the chute, so to speak, was a loser. Just tick me in and take me out. Lost right after the release. And so no big deal. I was going to take a second trade, and I did. And I got into another long position in crude. And at this point, the market just kind of went flat. And by flat, what I mean is there was nothing going on. It wasn't moving up. It wasn't moving down. And time was rolling on, getting closer to the end of the session. And I made a decision, and I haven't ever done this. I made a decision to carry that position overnight. And so there's a few things from that decision that I want to kind of point out to you, and hopefully you'll learn from this if you decide to carry positions overnight. First of all, you need to know on futures that the futures go offline at 5:15 Eastern Standard Time for 45 minutes. And what that means to you as a trader is you don't have any control over the market. If you know, it comes back online at 6, it could gap up and be in your favor, or it could gap against you way past your stop. So that's a risk you need to be aware of. Okay, so there's that issue. The second issue is when you go over into that overnight mode of holding a position, your broker is going to require more margin. And if your account can't take it, then you've got a problem. And what they will do is they'll liquidate you. Now, that didn't happen in my situation, but it's something you need to consider if you're going to hold positions long term in futures. So here's where it gets interesting. I decided to hold this position overnight, and it was kind of edging in my favor. And by the time I went to bed, this was at about midnight, I was still in the position. It was just above break even, like I said. And so I decided, well, I'm going to go to bed and let it be where it is in the morning when I wake up. So the next morning, I pop down to my office, pull up my screen, and I look at the trade, and for some reason, the trade hasn't exited. It's way past my original target objective, and I'm still in the trade. So I scratch my head and I say, what is going on here? And here's what happened. When the end of the day occurred, my OCO order got canceled. Okay, so my target objective that I had set out there and my stop was canceled. I was 100% naked overnight, no protection on the stop side, and obviously no target objective out there. Now this ended up working out in my favor because I actually exited this position much higher than my original target objective, but it could have been a disaster had it gone the other direction, way past my stop. So the moral of the story there is make sure if you're going to hold an overnight position, you take into consideration your margin. Make sure you have enough in your account for that. Make sure that you have your OCO order placed. And the reason I didn't see it on my matrix is it was outside the bounds of my matrix, and I just didn't catch it. So again, make sure you've got that in place. And so hopefully that would never happen to you. And Mark, that's something I'm sure in your trading you would never ever do.
I would never ever do it, except that I have more than once. And I've definitely done the exact same thing. I have forgotten that on those OCO orders, they're for the day only unless you change the setting. For instance, in your broker, you can make them good till cancel, but typically when you're day trading, they don't go in as good till cancel. They go in for just the day session. And you're right, it's really easy just to assume that you're protected, and you're not. But more importantly, I think you should be proud of me for maintaining this level of professionalism when you stated that you were 100% naked overnight without any protection. So,
whoa.
Right?
Whoa. I did set myself up there, and I'm surprised that you didn't take advantage of it. So pat yourself on the back.
Thank God for the mute button. Let's just put it that way. All right, so moving on to my tale from the stupid, and this is something we've actually really talked about before, and it's something that's it's a little frustrating because for me, because we get super busy, and sometimes we have a tendency to shortcut a little bit, and even though we know better and we preach this stuff and we talk about this stuff all the time and we try to convince people to follow our lead, it is interesting how sometimes we don't even follow our lead. And so there's a market that we trade, and we trade silver futures. It's not for the faint of heart, because it's going to be up and down week to week, but in the end it's a good market. And I know from our PTU, Premier Trader University systems, tracking these for a long time, over, I don't know, hundreds of trades, that this is a market that you should use a little bit of art in your trading. And what we mean by that is we have some terms that we call key level adjustments and chart level adjustments, and on a podcast, it's about the last place that you can really teach these things because it's kind of visual. But let's just say that markets like silver, but not all markets, have a way of bumping up against round numbers and struggle a little bit sometimes to get through those round numbers. So we literally had a trade today that was a buy, and without me remembering the exact price, let's just say it was 34.445. And I know better. I know that the number 34.45 is one of these key levels. And we have some automation running, and we have not had time to chat about turning on some of these key level adjustments in the automation. So what do you think happened today? It went right up to 445. It high-ticked us in and proceeded to go right back down to a stop out. I'm never bothered that much by a trade that stops out when it's just a trade I should have taken. But I am kind of bothered by a trade that we know better ourselves, our knowledge, the numbers, the data we have, and really the reason that we did not activate something, just haven't gone around to it, just been busy and don't want to miss the next trades and just haven't really had a chance to fully strategize. Bad move, right? I mean, it's amazing how often that type of thing can bite you. So even though we deal in this every single day and we preach this stuff to all of you all the time, we definitely appreciate sometimes how difficult it is to really abide by a trade plan and stick to it. I mean, we all know that we need to and we should, and that's why we bang it over your heads and our heads, but it's just a good example that even, we do the same thing. We make the same mistakes. Hopefully, you'll notice that over time we make a lot fewer mistakes, and I know I have for sure than I used to earlier in my trading career. So those are things between what Brian told you and what I told you that we just kind of hope from this segment that we can save you making some of these mistakes, save you some money. And this stuff very quickly, like in Brian's example, it could have cost him thousands of dollars. In my example, it cost us $750 per contract. So these are expensive little mistakes, and even though we sort of talk about them lighthearted, it's something to really think about. You got to be very detail-oriented and very disciplined to be a good trader. If you're not, you'll never make it. So now we're going to move into the genius section, because despite our stupidity, we actually do things correctly. So Brian, is this a case where you would like to go first here as well, or would you like me to go?
I am happy to take the first spot once again, Mark.
Take it.
Okay, so here's my advice to you, and this comes from a...
Me personally, or is this for the audience?
This is for the audience. I mean, you might get something out of this, Mark, so listen close, okay?
Okay, so I can go run to the bathroom real quick?
No, I told you to listen.
Okay, I'm listening. Go.
All right. So this comes from a silver trade a few weeks back, and this was a situation where we got into this silver trade, and the market just was not doing anything. And so I want to ask a question before I get into the final result of that trade and what happened. How long should a trade take? So think about that a little bit. How long should we be in a trade? I mean, I talk a lot about my best day being where I get into a trade and I'm out in a few minutes, right? That's the perfect day. But what about those days that take longer than that? An hour? If you're an intraday trader, an hour, 2 hours? That's forever, right? Well, this particular day, this trade took 5 hours, almost 5 hours. And not only that, inside the trade, there were many times where we had ebbs and flows in our favor and against us down towards the stop, back and forth. I'm going to say probably 6 times it wavered back and forth. So think about that a little bit. The point I want to make here is, as traders, when it comes to predicting what we think the outcome is going to be, when it comes to predicting the direction that we think the market's going to go, We don't know jack. We don't know. We like to think we do. We like to think we have some kind of inside scoop, some kind of inside insight, intuition if you want to call it that. But we don't know jack, all right? So just remind yourself of that. And the key here is stick to your trade. That trade ended up winning. But I talked to a number of traders after that who asked me the question, did you stick out that trade through the whole 5 hours? My answer to them was yes. And they didn't. They ended up bailing. At some point in that cycle, that ebb and flow, they bailed. So don't ever make that kind of a decision where you bail on a trade based on your emotion just because it's taken too long. Let your trade plan dictate and your methodology dictate when you exit a trade. So Mark, over to you.
Yeah, it's a really good point because we always try to tell people we do not have enough of an edge to overcome mistakes like that, getting out too early, not putting stops in, like the overnight situation. None of us are winning 98% of the time to where we can make 10% errors and still do fine. So it's really important to be aware of that. And sometimes it is the patience. I think we even had a trade yesterday that was kind of similar where it just went back and forth for hours sideways, and eventually it ended up breaking lower to target. But you know what? Even if it breaks higher and stops out, you still did the genius thing, which was stick with the rules and stick with the trade plan. My example is kind of a little different because it really could probably be in the other category, Tales from the Stupid, but it turned out to be a bit of a revelation, and I've had requests to come up with a trade plan for a market called the Euro FX Futures, which is basically the EUR USD for those of you in the Forex world, but it's the futures equivalent, and there's a lot of advantages to trading the Euro FX over the futures. The commission costs are lower because you don't have the forced spreads. Liquidity is great. It's centralized clearing. You don't have a lot of shenanigans that go on in the Forex world. And I've got people in the U.S. hours and the European hours who have wanted a trade plan for it. When I first tried to develop a plan for it, when we released PTU, I just couldn't get the right results. I was getting a positive result, but barely positive. And I'm not going to put out a trade plan if the history is not positive. I mean, it just doesn't make any sense just to satisfy requests from some people. But I was like, you know what, I'm going to take another look at this. It had been a few months, and I went ahead and started to test it, and I couldn't believe the results I was getting. I was like, what is wrong with me? Why did I not release this months ago? Because I was getting really great numbers. Now, again, this is something that's a little difficult to explain on a podcast because it's a bit visual. But if you're familiar at all with the Forex world, most of the brokers, well, a lot of brokers these days are going out 5 decimals, for instance, in the Euro US dollar, 3 decimals in the yen crosses, the JPYs. So when we actually are in like a platform like TradeStation or even MetaTrader and we're telling it 1 pip, we need to say it's actually 10 because as you can imagine, it's going all the way out to that 5th decimal. So when I was developing a trade system for the Euro US dollar, I left in my software the number 10, which was really just 1 pip. I brought all those settings over into the Euro FX, and I thought, okay, it's the same thing, it's 10. I just wasn't thinking, well, the Euro FX only goes out 4 digits. So on this particular setting, it was actually forcing it to be 10 pips. And what it really was it was forcing a lot of additional confirmation to get a setup. The 10 versus a 1 was a huge difference, but it was literally like a complete change of, reversal of fortunes from going from a system that was not working to one that had fairly amazing results every which way I looked at it, to the point I was able to get out a plan for the US session, the European session, averaging 250 to 300 bucks a week just for a single contract, maybe only 3 or 4 trades a week, so very little cost, and almost every week positive as I looked at it over time. It's fairly shocking, and I call it a genius development because I had no chance of putting out a plan the way that our systems currently works on that market, but there was just something about 10 pips over 1, and it was a mistake that really kind of led me there. It's the old story of how did the Reese's peanut butter cup come up? The guy with the chocolate bumped into the guy with peanut butter, and voila, it's one of the best-selling candies of all time. Of course, that's just one of those tales, but in this case, that's kind of how it was for me, and that was a really great reminder once again for me that as much as we trade markets with the same systems, there's just a lot of different behavior that sometimes logically we can't even figure out why a certain market won't behave just like another, but if you make a tweak or a change to what you do in your approach, you can take something that is not profitable at all and just fine-tune it enough to suddenly change, your fortunes as well. So for me, that was my genius. 2 great plans that are out there, and in a way, it was accidental. Now that I think about it, it makes totally perfect sense, but it's a new thing that I can use going forward. So anyway, that's that. So Brian, I think with that, it's probably time to head into our little interview here. All right, so what we'd like to do in this section of the podcast is sort of start to wrap up with a interview, a little Q&A session. So we'd like to have a guest each time, and today we have a very special guest. His name is Ron Weiland, and I hope I have said the last name perfectly. And Ron has been with us for many years. I don't even know how many years. And he's really, well, we call him the ticket terminator. Because anytime we get people who purchase our systems and enroll in the university and they ask questions about our trading systems, installing indicators, getting everything to work, Ron's really like been the front line, and probably nobody knows all the intricacies better than Ron. Has probably seen every question imaginable from an individual trader, and I'm talking from traders around the world. So he's probably heard the same question phrased 100 different ways. And really kind of brings a lot of knowledge in that area. And he also specializes a lot in doing some Forex trading. So I wanted to, just kind of take a little time out here and sort of ask Ron some questions and bring him on the mic. So let's do that first. Ron, are you with me?
Yes, I am. You did pronounce it absolutely perfect.
Great. Is there anything else people should know about you before we dive on in?
Well, no, trading's just become a passion of mine, and especially swing trading, because, again, I can do lots of other things during the day. I don't have to spend a whole lot of time looking at it in the evening. And so, again, there's a system we've got, the Keltner Bells, which really 10 minutes a day is all it takes. And we'll probably talk more about that. But I really enjoy talking to people all over the world. I mean, there are a few countries I have not called, and we give great support. Take over your computer if needed, but again, it's a unique company here at NetPix.
Well, tell me, why are you so passionate about trading? I mean, when did you realize that you were, and what is it about trading that kind of sparked that in you?
Well, probably it was about 8 years or so ago. I'm a pilot for American Airlines, and so I've got a lot of free time. And so then, you're looking at what to do with the free time.
But not while you're flying planes, right?
Right. Don't
get everybody nervous. Okay.
Exactly. No, unfortunately we don't have Wi-Fi up there yet, and I guess it's a good thing. But but I do have a lot of times at hotels and layovers. I do a lot of international travel, so therefore I can be at a city for a day and a half or 2 days. So again, you've got a lot of time, you're down there, and so that's where I kind of started. Of course, I've always been a gambler. I like going to Vegas and, gambling, and so I'm a risk taker. And so that kind of, fits hand in hand a little bit to trading. You just have to have controlled risk and make, educated or make the house bets as far as gambling. Put the edge in your favor.
Do you think your, the vice, your gambling vice, and I know I say that and you have fun with it, but has that helped you in trading, and if so, how?
It has, but it's also hurt. I've had some, when I was first starting out, made the catastrophic mistakes of doubling down, and, really trying to force yourself into a win. And so there was a learning curve, certainly in the first part of my trading, where it definitely did hurt. But you have to put that aside and kind of, think of, as far as your gambling, that, you want the edge. You're always going to try to put the edge in your favor. That's why being patient on trades, not trying to chase trades, things like that, it's where you actually become more of a casino manager. And so that, in that sense, it has helped.
What's your favorite game in Vegas?
Craps.
Craps.
Yep.
If you had to choose between playing craps and swing trading Forex, and you can only pick one for the rest of your life, which one would it be?
Ooh, that's tough.
You do like craps.
I would have more fun. I mean, it's so much fun, you know, and the action and everything. And swing trading is slow and peaceful, right? I try not to watch it after you know, in craps, I've done this before, though, when I'm teaching other people how to play craps at the table. I've just kind of left my money out there and not really paid attention, and next thing it comes back, it's a big pile. You can't really do that. You know, in swing trading, you kind of do that. You put your bet out there, and then you let it work. It just, you know, and that you don't do that. Yeah, there's more action and more fun in craps, but swing trading is more profitable than my crap playing. I can have some hot streaks, but then again, I usually walk away winning something in craps, but swing trading Forex, you know, I usually win consistently.
And sometimes you have crap trading, so you know you can kind of combine the two together.
Exactly.
One thing that you mentioned there, which I think stands out, is you talked a lot about when you're playing craps, it's fun, it's entertainment, and that's exactly how I would look at it. You're right, it's fun, it's entertainment, and your trading is not supposed to be fun and entertainment. It's a business, and those of us, right, who work and we work hard, most of us don't really describe what we do professionally necessarily as always fun and entertainment. It's rewarding. So I mean, actually, I think that's really the perfect answer. I mean, they should be thought of very differently. You know, you see the pile come up in craps, and oh, cool. If the pile goes down, it's not the end of the world. Right? You never want to treat your trading with the same kind of cavalier, I guess, attitude. Plus, when you trade, nobody serves you free drinks either.
Right.
So when you started trading early on, what market or markets did you initially try to trade? And then maybe, you know, I think you've kind of mentioned now you're a little bit more into Forex swing trading. Is that what you started with, you know, 8 years ago, or what did you start with?
I was starting out with Forex, but I was kind of doing Forex day trading. It was back in the late 90s, and obviously Forex was really very new. There wasn't a whole lot, you know, and I was just kind of reading. I had no indicators, just kind of reading the price action, and you know, I was usually right in my direction, but then again, wrong in my entry point. So, and then again, I blew a couple of accounts out because, you know, I would double down. Oh, it's going to come back. It's going to come back. And sure enough, it did come back, but without me, because, you know, I had just a small account. I had $2,000 in this Forex account, gain capital, and you know, so pretty soon you just got margined out and you're done, because I did what most inexperienced new traders do. They over leverage because, hey, you can control all this money and you can make so much money quickly. And I was probably trying to do that. You know, okay, I can turn this $2,000 and I can make $800 in one day, and trading for just an hour. So that was kind of how I started out until I ran out of money there and quick trade, took a breather from Forex, and that's how actually I came about with NetPicks. And I knew nothing about futures, the futures markets. And you know, we had a program out, the Universal Market Trader, I believe, or the Ultimate Trading Machine. I can't remember which one came first, but that was my first experience in futures. And so I was a client of NetPicks, and then that kind of grew, and so I really enjoyed trading the futures markets, and so I didn't do a whole lot with Forex for a number of years. And then I've gotten back into Forex. I don't do any day trading of Forex. I do it all swing trading because I'm day trading the futures, and because, you know, I can do those quickly. You know, I can be done in a half an hour, sometimes, like Brian said, you know, 2, 3, 4 hours. But again, it doesn't take much attention because I've got my stop and my target, and it's going to work its way out, you know, win or lose, whatever. So swing trading, Forex, really came about because I could add that to my trading arsenal, and it didn't take any time or focus away from, you know, the day trading that I do.
Yeah, you made a point there that I think probably a lot of people that come to us do, and I'm sure I've, you know, did it early on as well. And I remember getting this email a little while ago, and I get these from time to time, and it said something like, Mark, you know, your XYZ system is the best. I made 100% on my money last night. Now, I think a lot of companies in our space would immediately email that out to everybody and say, look at this great testimonial that we got, and would put it all over their web pages. To me, that's one of the worst testimonials that I ever got, because if anybody has doubled their money overnight, I know that they are guaranteed to wipe out their account sometime in the next 30 days just by using ridiculous leverage. So that is not a compliment by any means. It actually means that somebody did not follow our teaching and our teaching on risk management. And I imagine, I mean, you're on the front lines. You get a lot of these kind of emails. I mean, what do you see people struggling with the most? Because, I mean, we're always honest. We always tell people, look, a lot of people will enroll and they'll buy our courses, and not everybody uses them right, and they won't end up being successful because they just can't follow the plan. What do you see as kind of the biggest failing out there?
Right. I think that's very close to it. They get the program, and they're program junkies. They probably bought many different programs, and they don't follow through. They don't, really apply the program, test it, trade it, practice it, demo, and then build from there. If it doesn't have a great week or month, then they're like, okay, it's time. This doesn't work. Let me move on to something else, and they're going to find that whatever else they get is probably not going to have a miracle week or a miracle month. And so again, they're chasing something that they think will work and help them, but really it's not, because again, it's them, it's you, the trader, that typically is the downfall of your trading. So you have to just be patient. There's a number of systems out there that I'm sure there's a lot of them that work, but whatever you get, you want to test it, use it, stick with it, and again, if it doesn't work in the end, you'll know when a few months or 6 months or maybe even a year. But you can't just give something. It's like if the first trade that you take is a loss, that means the system's garbage. No, losses are a part of the game. You're going to have losses. So
let me flip the question around then, and you've also worked with, gotten to know some people who have been very successful and became successful. What is it about them that's different than the guy who just can't seem to figure it out? Same system, same software, same training. Why is it different?
It's the personality and the focus. We've had some people that went through one of our mentor programs, and they've gone on to trading for a hedge fund. You've got other traders that one guy, I've been working with him. He's over in Asia for the last month and a half, and he's doing extremely well with Keltner-Bells. He just loves it, and he's got a couple of our other systems, and he's like, these things are great. Some other people I know that we've talked to, they've just taken our systems and really applied them, made them their own, and they've actually given back and said, all right, here's a filter that I'm using. It's improved performance, maybe 2 or 3%, but they've taken the time to build, take the system, use it, and back test it. Very, very important. Like TJ says, you've got to know what to expect. That you can have a down day. You can have a day with 3 or 4 losses. Just this week on Monday, I called the live room in the PTU room, and it was a rough session on oil. With Trend Jumper, it probably hit circuit breakers. But there was a post right after that day that I think it was I'm trying to remember who it was, but he came, Dimitri said, I was down $800. I kept trading, and I'm up 500. And so he just worked through the choppy session, and usually oil will break into a trend, and it caught the trend, made up for all the losses.
So it's really like it's not even a magic formula. It's like people are always looking for the magic formula. You said work, commitment, dedication, effort, practice, backtesting. So I mean, that's it. I mean, I think, like you say, people, they're system junkies and they love putting things on their shelf. The people who actually really dig in, it sounds like those are the people that are going to make it. And a lot of times we can tell early on if it's going to be that type of person who's going to make it. You can tell, but it's just like probably anything in life, right? To be successful, if you put forth the work and the effort in the right areas, you'll make it. So I always kind of tell people, those first 6 months is the key. If you can just get through those first 6 months and commit to it, it's going to be the best, 6-month investment for the rest of your life. So Ron, let me ask you, as we start to wrap up here, outside of, trading, obviously you take losses, sometimes it's stressful, you hit the circuit breaker. What have you found to be just a good trading stress relief, or, what kind of, gets you to re-energize to come back the next day?
Well, I do. I try and start every day fresh. So, if I've had a down day, I just, basically decompress, turn the monitors off, and just don't even think about it, because every day is a brand new day. So I can just start fresh. I don't have to worry about whether yesterday was a loss and so I've got to win today. It's going to be what it is, and that I think is key. You just basically very focused on following your trade plan, executing, trying not to make mistakes or minimizing them, because you will make mistakes in trading. And from there, you're going to get the outcome. And whether it's a one-tick positive day, whether it's a nice winner, or whether it's a down day, it's just one day. And so, you just kind of keep focused on that. I'm looking at the week, then I'm looking at the month, and then I'm looking at the 6 months. That's where my horizon is. It's not, it's just so focused on every single trade. Will this trade win or lose? Because if you're sweating that one trade, you're doing something wrong. You're either over leveraging, using too much mark, trading with a smaller account, or you just have not conquered your psychological self to where, hey, the system that I've tested and I trust and I know works, that is telling me to go long here. I've made a small entry, for a key level, and now, it's just up to whether the market's going to get me to my target or take me to my stop or maybe break even. But let that happen. Let it play out. You kind of just pull yourself back and just kind of watch and not worry about it. It does really lower the stress level. But you got me into this. I'm now a treadmill junkie. So I've got, I've got the laptop on top of the treadmill, and I exercise. I go for a little jog with the dog every morning before trading, and then typically I'll be on the treadmill sometime during trading. And so that's one of the ways that I like to relieve stress. The stress that I do, I can take, I can take a little bit of stress in these markets. Yeah,
that's awesome. Yeah, that's something that a lot of us do here, that Ron was mentioning with like the stand-up treadmills, because you do spend so much time just staring at the screen. It's amazing how many steps you can get in, and it's also kind of good to kind of be a little physical while it's going on. It does a lot of good things inside your brain, let alone for your health. You mentioned something which I think is important, kind of pulling back a little bit or looking at the grander scheme of trades, or I don't know, you're a pilot, I don't know if you pull up on the throttle, and but the whole idea is to look at your trades from 30,000 feet rather than one at a time. So I always tell people, I don't even want to talk to you. If you're going to get whiny with me over one trade, I won't even hear it. It's got to be 10 or more trades before I'll even begin to sort of listen about the emotions of how the last 10 trades did, because 1 or 2 trades here and there means nothing overall. So I think with that, it's probably a great place to wrap it up. So it was a great interview, Ron. Actually, I definitely want to bring you back, because I just think you know so much. You've been doing this a long time. You've had to deal with so many people going through all the challenges of becoming a successful trader. So we'll definitely count on a future edition of having you back. But definitely thank you so much for that interview. And with that, we're going to go ahead and wrap up this podcast. Just a quick reminder, certainly in iTunes, make sure you subscribe, so whenever we come out with the next issue or the next podcast, I know we're not super regular with it right now, it'll automatically download on your phone, or you can go to our website and get it in case you're on a different device. Give us a review if you could, if you wouldn't mind. And definitely go to netpicks.com/hangout, and you can hang out with us weekly. That we're really good about. Every week, Friday afternoon, we do a video-based live hangout, and it's free. Or go to premiertraderuniversity.com/webinars and come to any of our free educational webinar. So thanks to Brian, thanks to Ron, and everybody, great trading. This is Mark Silverman with the Day Trading Authority.